This is the Daily Market Rundown live from the Tradelo Trading floor. It's January the 22nd. Some highlights from today's show. Trump talks tough on Europe. German Bunds are signaling, and Google stock is now in play. Good day, traders, and welcome to the Daily Market Rundown. Let's start off and talk about some of the overnight news. I think there was a bit of news around the ECB, and the consensus is now firmly for that rate cut to come next week. Now, that isn't new news, of course, but what will be very interesting at the ECB meeting next week is to get a real good understanding as to the speed at which they think they're going to need to cut. Now, what's going to play into, of course, that decision-making is what's going on in the United States in terms of tariffs. If they are going to impose some aggressive tariffs, that will likely force the ECB into action a lot sooner than they would perhaps like. Now, in terms of market pricing, market thinks they are still around 4 cuts priced this year. ECB thinks 4 cuts this year. And we've got ECB members now telling us they should reach their inflation target by the middle of this year. So, for all intents and purposes, what that does mean for the euro in particular is we should continue to see downside pressure. Of course, today we have broken up, but this is less to do with euro strength and everything to do with perhaps a little bit of profit taking in the dollar space. Now, let's turn our attention to the first sort of topic matter, and that's all about Trump, and his threats. Of course, he started off with Canada and Mexico. He's told us that, of course, if Canada and Mexico are not going to stop some of the fentanyl trafficking across the border, as well as some of the immigrants moving across the border, he is going to be very aggressively imposing some tariffs as soon as the 1st of Feb. He's effectively mentioned 25%. We did hear some commentary both from Mexican officials as well as Canadian official Trudeau yesterday, and their response was, look, bring it on, baby. And I think that's interesting because what they're sort of suggesting is that, you can lay out the threats, but in reality, it is a tit-for-tat type scenario. Now, the worst case scenario from these tariffs, and this is not something we rarely experienced in Trump's first presidency, was in the first presidency there was just this general agreement with regards to NAFTA that the US was getting the short end of the stick, and the result was the NAFTA agreement was redrawn. Okay, this time around, of course, Mexico's told us that we can't redraw the NAFTA agreement until 2026, which means in effect you may actually see both Mexico and Canada stand firm and say, well, look, in reality, if you want to impose tariffs on us, we are going to counter those with tariffs, in particular on US corn. Now, what does that mean? Well, everyone loses in that scenario. You've got higher inflation numbers, and it's not good for the US, nor is it good, of course, for Europe. So keep a close eye on that. That is perhaps one of the worst scenarios we can get, is a tit-for-tat type scenario in terms of tariffs. Market's not really expecting that. Market's kind of expecting that the Trump threats will be mostly idle, that we'll see some giveaways in terms of agreements being done on the sidelines, and as a result, there will be no tariffs imposed. So just keep an eye on that. Is a key risk, is that, of course, Mexico and Canada don't give concessions, and they prefer, of course, to do tit-for-tat type tariffs. Now, with that in mind, he labeled some threats again at Europe. We know this is expected, and of course, once he's sort of resolved Canada and Mexico, I suspect Europe, and in particular Germany, is next in line. And we know that Europe is the sick man of the world right now. We of course had German officials come out this morning and say stagflation will likely continue again in Germany. We of course have had negative GDP now for 2 years in a row from Germany. So problems continue in Europe, and what that means is when those tariffs or those tariff discussions start to come down, we are going to see further pressure, in particular on European markets. All right, now let's actually go and have a look at some of the other news. Nasdaq bit up overnight. We can see obviously S&P's up 30 handles overnight, and this is sort of kind of off the back of the positive sentiment, kind of off the back of no one wants to short it, kind of off the back of DAX is up 7.5% this year. The reality is that we're seeing most of the movement coming in the overnight session, and it's being done in particular on thin volumes. Now, last night's session was driven, or a lot of last night's session was driven off of Netflix earnings. Perhaps there is some thinking that if Netflix has done well, then perhaps everyone else should be doing well come earnings season. So there's that in terms of thinking, but I would throw a little bit of salt on that. Keep in mind Of course, if you look at the timing of when all these subscribers came on board, it was the festive season. Think cold weather. People like to sit inside. They like to Netflix and chill. And of course, we do have, Netflix now adopting more sports. So we've seen a lot of sports documentaries, and in particular, we had the Mike Tyson fight against Jake Paul. So again, what I'm suggesting is keep an eye on Netflix today. I suspect this 14.5% rally in overnight markets will be faded. I'm not sure this is a new trend for Netflix, rather just a little bit of a seasonal type play. So watch Netflix. I think there should be some good sell side opportunities at the open come 2:30 this afternoon. Now let's turn our attention and look at the Mag 7. I think this is interesting. It's intriguing because we know that most of last year's 30% rally in the stock market came off of the back of Mag 7. It's been all about Mag 7. And yet the key thing, if you look at this 300-point rally that we've had in the S&P over the last 6 sessions, the Mag 7 has not really taken part in that, barring one. Okay, I think Alphabet, we are at record highs. We'll discuss that chart in a moment. We are breaking out. But in essence, you can see the year to date, which is this column over here, the Mag 7 aren't exactly shining. They're not exactly talking record highs. I mean, Nvidia's well off record high territory. Apple's, of course, getting slaughtered at the moment, down 11% this year. Tesla, coming off the Trump boom and the Trump sort of, presidency, is only up 5% this year. And Meta, of course, is also only up 5%. So the Mag 7 is lagging, and that's the key. I think this is a key, interesting takeaway, is that we've seen this bid up in, of course, equities. We can see NASDAQ flying. We can see pretty much all stock markets flying, but it's not being driven by the Mag 7. And that's interesting. What does it mean? Well, it means two things. One, should we see the Mag 7 start to partake? Well, then, yes, this rally has got some legs. Okay, and it's not one that you want to be fading. However, should we start to see the Mag 7 rotate and move a little bit low and continue the sideways move, I suspect this rally we've seen over the last 6 sessions is about to come under a little bit of pressure. So keep a close eye on that. I think we are nearing the point where you can start to short both NASDAQ and S&P, but we're going to need some signaling, and that signaling is going to come in the form of yields. I think this is a chart I posted in the Discord channel for you, and it looks as though if you watch the European session this morning, it looks as though European bonds have now found some very interested sellers, and we should start to see yields push back a little bit higher. Now, what does that mean? Well, we know that at the start of this year we had a push, particularly in the long-dated bond yields, and as a result of that, there was quite a strong correlation, a negative correlation between higher yields and equity prices or risk markets in general. So I suspect we've now run into this point where we should start to see more selling in the bonds, and as a result, I think given the extent of this rally in the last 6 sessions, we should see a little bit of pairing of those positioning, a little bit of profit taking over the course of today, tomorrow. So keep a close eye. I think S&P and NASDAQ are both decent short side trades, so long as we do start to see those bond yields rise. Okay, now what gives me that sort of indication? Well, if we go look back at Tuesday, of course, in the Bunds, you can see we had quite a lot of absorption. And again, for now, just ignore the trend lines. What I'm trying to indicate to you is we have this series of, sort of higher highs and, of course, a series of higher lows. The key takeaway, of course, is we had quite a lot of volume transacted on Tuesday. We came in and tested that this morning, and you can see we've got that V-shaped reversal. In other words, someone was happy to sell 132s in the Bund, and this morning they were far more intentional, far more aggressive. Now, what we're looking for is a break of 131.80. Should we get below that, I suspect all bond yields are going to rise. Okay, and what does that mean? Well, given the S&P has rallied near on 300 points in the course of 6 sessions, we should see a little bit of paring back on that. Does it change the trend? Are we going to suddenly see a 300-point drop? Perhaps. Okay, you would need to see yields ride quite significantly to see that. The point being, you should see some profit taking today, tomorrow. So keep a close eye on the bonds, and in particular what they do to the equity markets. Now, this is that chart, of course, moving over to the US bonds, because we need to, of course, see that little bit of elevated bond yields in the US. And what you can see is, again, this is the 10-year yield. You can see we're running into the series of higher lows again. Don't be surprised to see 10-year yields push up a little bit higher. There is, of course, the gap from the Monday trade. But equally, don't be surprised to see us start to move back up towards that 4.8 percent over the course of the next couple of sessions. Okay, and like I said, higher yields should imply a little bit of profit taking in the equity space. Now finally, let's talk a little bit about Google. It is a stock favorite of mine. I am quite a fan of Google. I've been quite surprised that they've been a bit slow on the whole AI take up, but we know Gemini, and the result of Gemini is what drove most of that Q4 rally in Google. We've then had that flag formation, and what I love about this is not the flag formation. What I love about it is how the 20-day moving average is now caught up. What does that tell us? It tells us the market went into overbought territory, it consolidated, the moving average is caught up. In other words, the market has neutralized that overbought territory, and now it's ready for an extension higher. So a really nice looking chart. This is quite a favorite pattern play of mine, because the market's now allowed that overbought to sort of neutralize itself. So keep a close eye on this. I think today, tomorrow, we should see Google rally to the upside. Like I said, key is going to be yields. Okay, if yields hold off, if bond yields do not push any higher, I do suspect that we should see a nice rally in Google over the next course of the couple sessions. Okay, keep an eye on that. A good one to trade, particularly if you are a stock trader. Now, let's turn our attention and just look at some of the sort of market moving events. There's not a great deal out, unfortunately, today. Like I said to you yesterday, the key events for this week will come, of course, on Friday when we have some of those PMIs. So today's going to be all about just general positioning. I think keep an eye on those yields. I think that's going to unlock the clue. Apart from that, of course, we do have to focus now on what Trump says. And of course, we have to focus on, in particular, what he says and thinks about Mexico and Canada as we move into that 1st of February deadline. That's it for today then. If there are any other questions, do post them in the private Discord channel. Otherwise, as always, good luck out there. Manage that risk. Go make some money.